The world's fastest-growing major economy is slowing down. Why? New Delhi has lowered its GDP growth projections for the 2025 financial year, even though economists say fundamentals remain strong. India's economic growth is projected to slow to 6.4% for the financial year April 2024 to March 2025, marking a four-year low, largely due to weaker performance in the manufacturing and services sectors as per government data released on Tuesday. According to government data released in December, GDP for the second quarter, July to September, stood at 5.4%, marking a seven-quarter low. India's Finance Minister Nirmala Sitharaman described the GDP decline in the July to September period as a temporary blip. It projected economic growth of around 6.5% for the 2025 financial year, a slight adjustment from the earlier range of 6.5 to 7%. Additionally, it suggested that the Reserve Bank of India's monetary policy stance may have contributed to the demand slowdown in the first half of this year. International financial institutions have been overall bullish on India's growth. In June, the World Bank had upwardly revised India's GDP growth forecast for the current financial year, 2024 to 2025, to 6.6% from its earlier projection of 6.4% made in January. Industry watchers have cited a combination of factors for this lower forecast. The slowdown in the July to September period was primarily due to reduced government capital expenditure, lower private sector investment, decreased manufacturing activity caused by geopolitical risks, inadequate job creation, and rising food prices. Inflation remained a challenge, with the country's rate rising to 6.2% in October 2024, exceeding the Reserve Bank of India's upper limit of 4%. Jobs, too, remain a burning issue for the world's most populous nation. Even with a slight slowdown, India's economy is still growing faster than that of its powerful neighbor. The Chinese economy, the world's second largest, has come under some stress in 2024, and going forward, this is likely to continue. New Delhi contends that the recent slowdown in GDP growth does not reflect the broader economic trajectory for 2025. Finance Minister Sitharaman stated that the dip during the September quarter was not systemic and expressed optimism that increased public expenditure in the third quarter would counterbalance this moderation. The call from the markets on an interest rate cut by RBI in February is bound to get louder, economists point out. It is generally postulated that interest rate cuts by the central bank help in higher borrowing, which helps in stimulating the economy.